People don't realize what a slave they have become as a result of the way that they're taught and as a result of how they implement the felonious teaching that they run into. It's not teaching, it's indoctrination.
It seems to me that there has to be a fundamental understanding that there's a difference between the process and the vehicle that's utilized to implement the process, because in the financial world, participating dividend paying whole life policies have been a product that has been compared to other investment products. And so the key teaching point must be that a person understands that a process is never an investment.
True, exactly. But you see, the problem is with words. We got the word insurance. Every other form of insurance out there is expressing what would happen if something should happen during a time frame. For instance, should this house burn during a time frame? If and time frame. Life is not if, it's when. It should never have been called life insurance because that's not what it is. It's really a personal monetary system with a death benefit thrown in on the side just for the heck of it. That's a rather long name, but they've been far more accurate. We wouldn't have all this nonsense. But see, again, that's the problem, is that man, for some reason or another, has that tendency to change the meaning of words. For instance, in our country today, the definition of home ownership is that you have title to a piece of property, but you owe more on it than it's worth. That's home ownership. No way. But yet, that is a currency. People don't realize what a slave they have become as a result of the way that they're taught and as a result of how they implement the felonious teaching that they run into. It's not teaching, it's indoctrination.
So this is all about how one finances things in life, which can certainly include investments.
Sure, but again, yes. Yeah, in fact, any investment should be made from here. It's just like something else that we will run into later on in the book big time. That's EVA, economic value added. We don't have time to address that right now. It's not the appropriate place for it. Again, I designed the book to teach progressively. You got to understand this to be able to go to this level, to understand this, to be able to understand this. By the time we get out there to the infinite qualities of it, there's unbelievable things that are easily possible, but people just haven't thought of them. They don't think of it this way, that's all.
On page 25 of your book, you ask what many perceive to be one of the most important questions in the book. And it reads, would you have much of a grocery business if you were the only customer?
I don't think that would work, would it? You got to have other people out there. You can't live in isolation that way. That's all there is to it. We're here with other people for a reason.
Where that becomes so important, as a person is going through their journey of learning about this process, and they understand that when you initiate a policy loan from the life insurance company, a business that you co-own by virtue of being a participating dividend-paying whole life policy owner.
Yeah.
Now, the insurance company calls for interest on that policy loan.
Yeah.
And we've heard this frequently, where people say, well, if I'm paying interest back on the loan, is that benefiting me specifically? We draw people's attention to page 25 of your book.
Yeah.
And we have them read that question out loud, because you go on to say that you must build your grocery business to the point where you accommodate the needs of others in order to prosper.
Sure. There's got to be other people involved out there.
And the same principle applies to banking.
Yeah. Within our family, when we bought something substantial, automobile or piece of equipment or something like that, that money is put to work at that location where we pay it back like we was paying a bank somewhere else, plus some more money. That's more capital. All right. Now, when it went back in, what happens to the money? It's at work somewhere else. That's all. It's always at work somewhere. Like here in Birmingham, quite often done seminars at a private club up on Red Mountain overlooking the city. And I point out that there's a center of town down there. There's 4 buildings. 3 of those 4 buildings were financed by Equitable Life of New York. River Chase out here is a real estate development financed by Equitable of New York. There's a shopping center right next door to it called the Galleria. That's Metropolitan Life. There's another one out on 280 south of town here that's Metropolitan Life. The money's always at work somewhere. There's a shopping center that was built a number of years ago. There's not a single business there now. Looks like a downer. But the insurance company that financed it all, they'd recovered all the money they put into it before it ever bellied up or whatever. It was one of those bad locations.
I've heard you say the more capital you put in, the more capital you get out.
Sure. Yeah. There is no such thing as overcapitalizing.
And we say to folks, in addition to that, that we've never read headlines of a business failing because it had too much capital.
Yeah, that's right. Yeah. Exactly. There is no such thing.
And so this is really, again, all about the process of who's getting the money.
Yeah, but have you ever expressed how much joy it is to experience this? That's the fun part. This is fun. There is no such thing as overcapitalizing. There's no such thing as having too much money in anybody's bank, particularly your own.
Well, you know, when you think like a business owner, it's tough enough running a business with money.
Yes.